Hey guys, what's going on? Today I'm going to be covering Ocean, and if you enjoy this content, I would really appreciate it if you subscribe to the channel and give the video a like. Okay, so after looking at this chart for some time, I've narrowed it down to basically 4 different segments that I can find, or shall I say 4 noteworthy segments. I've colored them just so it's a bit easier on the eyes, but these are essentially just high time frame support and resistance levels. High time frame meaning we're on the weekly time frame right now, so these are quite large zones when you zoom into the lower time frame. So this is more for an overall outlook from a macro perspective. And the most critical one that I see right now is the one that we're currently trading within at market price, which is in yellow, which I've listed here as the high time frame support resistance level. And of course, as we know, you want to see SR flips if you're going to turn resistance into support. It's a very simple theory, but that is currently what Ocean is attempting to do. If you point your attention to the yellow region and its historical price action, you can see that this is a noteworthy zone where Ocean likes to do business, or has done in the past. And most recently, off of the bear market bottom, way down here below our green, we had a very nice breakout of the bearish trend and pushed all the way up to yellow, and even actually wicked up to our next resistance block in red, which is our active resistance block, with a pretty major rejection. And you'll notice if you look really closely, we actually closed the candles right on the 100 exponential moving average, the thin gray line here moving with price, really well respecting it as resistance with its first real interaction with that EMA since that EMA became visible on this time frame, and thereafter respecting it with a high degree of resistance. Which brings me to my next point, which you will notice is that price has now seemingly flipped that EMA into a support level. Now, just as we saw back here with this massive deviating wick, I call it deviating because the candle closes were not able to breach the EMA, so no matter how far that wick comes up, in my opinion, it's a deviation. But you'll notice that we got quite a deviation above the EMA. So the vice versa must be true. We can accept deviations below the EMA. We can even accept a much larger deviation than currently what we see on the chart. But before we get too much into that, let's bring our attention back to these key segments. Green was objective 1, and that is currently our absolute must hold. If the bear market has indeed completed, we will not see price go below green, at least for the foreseeable future. So that's why I've marked it as our must hold. This is our first higher low that we printed recently off of this consolidating downward sloping channel. This was some really beautiful consolidation within this channel, bouncing from the channel high and low and dancing on the equilibrium. Really tight consolidation, which allowed for this next most recent move to break out of that channel finally. But what this move did, the prior move, was put in a macro higher low off of our bottom out of the bear market from this leg here. So you can anticipate if this run is going to continue, if the bull market is indeed on, it's not going to be straight up from here. There is key criteria that each digital asset will need to meet in terms of reclaiming high time frame key levels, such as for now our yellow high time frame SR. This was clearly our resistance from these candle closes on the first leg out of the bear market after objective 1 of reclaiming our green zone, which was done after that first leg up. And with all of these liquidity sweeps on these wicks here into green was just demand scooping up that liquidity, very brief opportunities, but ultimately putting in that macro higher low. And the reason why I don't think that we have truly flipped our yellow high time frame SR level yet is because you'll notice that we put in essentially 2 equal highs here, right here and right here, connected by the dotted line. Now this is a sign of weakness in the trend, and that's what I mean by saying it's not just straight up from here. Our current objective is to reclaim yellow and accept it as support. And as I said, even if we get deviations back down below the 100 exponential moving average, back down towards the upper band of this downward sloping channel as a breakout and retest of that channel, and a sweep of liquidity from these wicks, these lows down here, which is the bottom of this consolidation zone right here, it would be a sweep of that final liquidity within essentially this overall first leg, breakout leg that we have here. I see no reason for that to be a problem. I think it would still be perfectly healthy, and we're talking a drop down towards potentially 35 cents from current price at the time of this video. Now this is not necessarily a prediction. We could easily break out to the upside from here, putting in this as our next higher low from our prior higher low and make a push for red, which is our next resistant block. Personally, I would like to see a bit longer consolidation before attempting to break red, but it doesn't mean it can't happen. So first things first, I want to see acceptance in yellow, not below it. I want us to see price trading above the 100 exponential moving average, which will look something like this after the coming weeks, or potentially something like this. But either way, it's perfectly healthy price action right now. And I do in fact think if we do come back down and start to test this legs liquidity zone right here, it would give us one final sweep from these lows, flush all these lows, break out of this downward descending triangle and get something that looks like this. Would be just fine in my opinion, but I do want to see it happen swiftly, meaning I want to see us start to put in strength again to attack our high time frame SR in yellow. And then just looking left, we've got our next area of resistance in our resistance block 2 up here in gray. So a little bit less of a significant level, a little bit less data to work with, but still definitely an area of resistance. So perhaps red's going to be a bit more difficult to get through and gray a bit easier. Who knows? Time will tell. But I wouldn't be surprised if we break these two equal highs on the next leg. So in theory, if we get something like this that I'm looking for, maintain yellow, reclaim the EMA, and then take out the highs, that would mean that we're essentially taking out our resistance block 1, which means we should get a rejection off of our resistance block 2, and then get something like this where price will correct back down to our resistance block 1, which will have been flipped at that time. And then from that point on, we reevaluate, reassess, and monitor. So let's not get too far into the future here. First things first, get our flush down to liquidity, confirm that it's going to maintain this current trend that we've got, confirm we're going to get back inside yellow and make an attempt to reclaim that 100 EMA to attack red and attack gray. If the market tanks in the meantime, then I don't anticipate getting us this leg. I would anticipate more of a continued consolidating pattern and back down towards our green zone, which if you remember, it's just our must hold. It does not mean we can't trade down to it again. It's very possible that this leg could just fully retrace, lose its momentum, and we come back down to this macro consolidation range here for further consolidation. And in the meantime, we could hold green and maintain a high time frame bullish structure very easily. It's all about what it's going to do, how you want to play it. I'd be prepared for this scenario, or equally as prepared for this scenario as the previous scenario I just showed you. But that's just me. Now there's one last piece I want to show you. Let's drop down to the daily time frame here and just look at this a little bit differently. As you know, I like to use ranges. So if we clean up the chart, and I've covered this in many videos prior to this, we've clearly put in our swing high here and we've already got our correction, and we are either working on our next leg up off of our first leg here, so potentially working on a third subwave of a 5-wave structure. However, this is still to be determined, as we've clearly for the interim got a swing failure pattern here on the last local high, as I noted earlier, which is equal to our prior high over here, meaning momentum has slowed. But another simple way of looking at it is it's just our overall range high down to our range low. Okay, and so clearly we had our range high put in here and our range low put in down here over quite some time and a really choppy environment. God forbid, sorry if you were trading any of that, but a very well established range here with a range high in EQ and a range low. And just as I covered earlier, if we break down from this triangle and we fill up a little bit more of our yellow region here, and as I said, sweep some of this liquidity, sweep the lows, ultimately, what do you see us doing down there? Yes, exactly. We are reclaiming the equilibrium of this macro range, or rather retesting that equilibrium of our overall range. So we had our swing high, swing low, danced around in the range. Yes, we got rejected up here at our range high again here, but in the meantime, we've reclaimed our equilibrium and are about to put it to the test, in my opinion. And typically, if we're going to see continuation, I cover this all the time. If we have a range, what you want to see in price after a move up and a clear range that has been established is you want to see eventually a reclaim and acceptance above that range EQ. So of course, not perfectly to scale, but something like this is what you're after. And if you're playing it more conservatively, you can take another range from the range high down to the EQ, which will give you that top quarter quadrant equilibrium where you can safely say, okay, we've reclaimed the macro range EQ, but I want to wait for a reclaim on lower time frame above that upper quarter quadrant, which is a bit safer of a play to take it up to the range high and possibly beyond. But I'm not advocating for people to long near the range high. Of course, there's context involved that matters. How long has it ranged for within those parameters? What's the structure look like Is it strength? Is it weakness? Because of course, everyone will tell you, yes, you want to long down the range low and sell at the range high. However, if you're going for that next major leg, the macro leg, and you're not simply taking it from the range low to the range high, but in fact, you're looking for that breakout and next major move, then the setup waiting for that confirmation of these reclaim levels is how I play it. But to each their own, play it as you see fit. Let me know how you see Ocean. If you have some thoughts or comments, put them down below. And as always, if you enjoyed this content, please give the video a like and subscribe to the channel, and we will catch you all next time. Peace.